Hey fellow trader, welcome to Dean's Dojo. This is my journal. This was the 1st of September, a new month, and we know that August closed nearly on its high, very bullish bar. And what happens? What do I want to tell today? First of all, a word about the 5-minute chart, because I really always use the Al Brooks style of 5-minute chart, which means no Globex session. It's cut from the close of yesterday to 3:30, which is 9:30 New York time, and in between there's nothing. So the only thing that really changes and why it matters, in my opinion, is the EMA, because like this, the EMA doesn't care about everything that is in between, and you can say yes, it is absolutely random, this choice, because yeah, we have this whole overnight thing going on, and the EMA would look certainly different. It looks let's find the moment. 3:30 is here, around that time. Okay, so all the while we are below the EMA if we look at this 5-minute chart. So the triangle is forming below the EMA. But if we look at the 5-minute chart of Al with the break, we are above the EMA, which turns out to be good. So I trust his experience. And I really see that this is nonsensical to have this huge, look, this is overnight. This whole thing is overnight. The volume though is way less. So this EMA is biased a lot. And I think it's wrong. On the 2K tick chart, that is the other world. And there I use it. And maybe because, I don't know, I think I can manage to do both. Yeah. But for sure on the 5-minute chart, I love it that way. It's so clean, it's so nice. And I want to show something that Al wrote on his free daily chart analysis. Someone said, well, didn't you see like the overnight, the Globex session, it like got smacked down. And yesterday we came up. So, right here we have this surge. If we are on this chart, we come up, trading range, we resolve to the upside. If you are on the other chart, however, you see going down into the trading range. And so then this poster says, well, then they even each other out, they annihilate, like the overnight traders annihilate the evening, like the last end of day traders, and that's why the triangle forms, whatever, And Al just says, well, I think a trader has a better chance of making money if he thinks like Forrest Gump than like Einstein. So of course, that's like Mac. I'm pretty sure Mac says the same thing. He says, I just trade one chart and never worry about the thousand of things I'm not seeing, and all the other correlated markets and time frames. So that's just a choice. I know of just other people who have all the markets in their head and then they make decisions based upon that, and that works too. You just have to go with one approach and trust yourself, and if you feel good about it. So I don't feel horrible using both, because today, by the way, it's a very beautiful post, very positive outlook on old age and all of that. I think it's nice. So one of the things I did many mistakes today on the 5-minute chart. The thing is, the 5-minute chart, first of all, it helps me immediately in the beginning, like after 1, 2, 3 bars, or like after this 1, 2, 3, 4, 5 bars, I see down and quite big up. So I already have 1 reversal, 2 reversals. So I know this is breakout mode, which means we are in a trading range open. So I'm not expecting, especially after this reversal up, I'm not expecting any big trend to emerge right now, or, it can break out, yes, but I just know already after these 3 bars that a trading range in the beginning is more likely. And on the 2K, you're like, if you're unexperienced, you think, what, it could break out any moment. And here you're a bit more chill. And a trend from the open is unlikely right now. Okay? It doesn't mean that this could already be the start of a trend or so. Could. But then you see the big tail on the bottom. And you think probably not. Plus the EMA. Okay, so let's jump to the trades. First one was my indicator, and I'm absolutely okay with it failing, because even like price action wise, I know it's a first entry price action wise, but this uptrend you can say already broke and played out. That's again one of these little things. But yeah, so this no-brainer for me to take. And then I wanted to re-enter, and I had my limit order. And I know Thomas said, yeah, he couldn't enter here because he was taking some failed breakout at the low side here or something, and he was holding a runner. But the thing is that he would not have gotten filled here with his limit order, so he can relax. I'm pretty sure, because I have my limit order here on the MES, and like once it broke down, it never came back to fill that limit order there. So that's a pity. And I re-entered because I know that's often what happens. Like the indicator triggers, and then it comes back one more time and makes a divergence. So, and it's a second entry short. So, and then I was a bit, because this would have worked, I think, pretty nicely for was it 2-1? I'm pretty sure it was 2-1. Yes, perfectly for 2-1. And then, you lose one, you win one with double the win, so that would have been perfect. Didn't happen. But then, so that was this big bar on the 5-minute chart, or this one, I think. When it reversed, I was already, okay, let's sit on our hands now. Okay. And then in this mess, I do not take any trades in this mess on the 2K chart. Right, and then I started on the 5-minute chart. And my mistake started, because then I thought it cannot break above yesterday's high. It wants to, but it can't. And when this big bar formed, I entered below the prop for a swing trade. And that is the big lesson. Now, already here I entered for a swing trade, because I thought breakout mode. We have to anticipate the breakout, First of all, we don't have to do that. It's smaller. If we do it, we have to embrace the responsibility and say it's smaller probability that it works. And I'm sure Al never enters high up in a possible range, even though it is breakout mode. So basically the adage, you see this is trading range. So then sell high, buy low, and scalp. Okay, so here I violated the buy low because I bought high, basically in the upper third of that trading range. Let's say this is the trading range here. And if you just stick to that and just tell yourself, here I also saw inside, outside, inside, a pattern, a breakout pattern. So it's fair enough, but it is, I played it as a swing trade. I really hoped it would go like 2-1 upside, because then the upside target would be like double that range, maybe something like that. So it's fine, but I wouldn't take it anymore, because I do not want to take too low probability trades, right? Okay. Then here, I violated the exact same rule again, because I thought, okay, big bar down. Now we go to the other side and break out. So basically, I was now caught in exactly what on the 2K chart, I avoid by my experience on the 2K chart. Because there I would never, ever go short here or go long up here. Never. And here it happened to me, because I'm more in the mindset you have to go for swing trades. But even then, you should buy in the lower third of a trading range or sell in the upper third of a trading range, so that you still have the possibility to scalp out or get out break even if it doesn't break out. The third trade I do not mind, even though Al doesn't have it marked, probably because the bear bar doesn't really close near its low and it's just above the EMA. But for me, that was a lower high. The entry is in the middle of the trading range, so I get why it's still tricky. On the 2K, we had the nice setups. So my lesson is, if the 5-minute chart shows tight trading, because it's pretty tight trading range here, then rather go to 2K chart, find your trading range, and then take the small trades, like Mac and Thomas have a lower high here. And that was the lower high basically on the 5-minute chart, that one. And the problem then was, if I'm in a trading range and I do correctly buy in the upper third, or sell in the upper third, I should scalp out. I think at least parts. But I thought, let's go for the breakout and the swing trade, right? But then if this bar happens, you have to get out with one tick of loss. That would have been one tick. And I didn't, and I just thought, let's just keep our stop up here, and I just bet on breakout to the lower side for actually no reason. If I had to bet now, like there is only reasons that the 20 EMA is below all the bars, and here it just bounced from the 15-minute EMA for the second time. So actually, if any trade would have been good to go for swinging, would be more to the upside. So yeah, couple mistakes. Yeah, good learning opportunity. And but yes, the problem was that I always thought, but I go for a swing trade, right? I go for the breakout. But still, if the probability is only 30% that it works, it's not worth it. And here I like to quote another thing I read by Al, which is just true, it's not even an opinion. If you go for a 1-point scalp with a 2-point risk, let's say, right, like Macians do, or Mac does, and it can work, but for the very few can actually make that, because they all say, yeah, you need 70% probability and you're good. But no, you're not good. You do not want to do this job sitting in front of a screen for just a measly 2.3% edge, because break even would be 66% plus commissions. I'm pretty sure it's maybe 69 or 68 or even 70. Let's just round it. 70% you're just breaking even. So you need better than that. And how much better? I would say you need 80%. And even then it's hard. And let's imagine, and the 80%, that's then the 10% edge you have. And that's over a big amount of trades, like let's say 100 trades. Then you have these 10% that really start to be consistent money. But you'll still have quite the variance in there, right? What was my point? And I mean, then they always say, yeah, just go for the best of the best of the best trades, because how many 80%ers are in there every day? And if you go, let's say, for only 1 or 2 trades a day, it takes a long time to beat the statistics, to have a big enough sample to really get to your true edge of 80%. So it is a marathon to do that. And if you, however, go for 2 or 1-to-1 risk to reward, 1-to-1, as Thomas does, and I also like to do it on the 2K chart with normal scalps, that is much more achievable, because it starts to make sense from, let's say, 60 or 70. If you have 70% win rate, then you're good. Like, that's 20% more than break even. That's good. So, okay, that was just a little rant. All right. Here, then I took here this Fibonacci trade. Why do I say it as if it was a sin? I think it wasn't a sin, but I took it prematurely. So yeah, it was a sin. It was against my rules, because my rule says I can do the divergence trade at a very, very, very specific location, and that is exactly at the 61.8, or between 61 and 65. And it happened on the 512 tick chart, but it happened earlier. It happened here. So what actually happened is I didn't lose any money on that, but I got my first contract out, and the second one was then in order to make it all break even. But that, I would say, that was the tilt trade of the day. Because it was really not according to the rules. These I took with my best knowledge, and now I know it's flawed still, because it just violated the basic trading range rules, and it lowers the probability considerably of my success, right? Okay, and that's fine. That's what you can learn from. And this was just sad that it didn't fill me. Let's look over the indicator trades here to close that. So we always have to see downtrend here, the EMA below the SMA down. So we look for these situations. And I already told you the first would have failed, but the second one worked. Then flat. So from here on, we don't care anymore about anything. No, none of this at the moment for me. I mean, even though you see sometimes it would have worked, sometimes not, but it's flat. And here we can start to say we're in an uptrend, right? But it never comes back down to the 40, because remember, in an uptrend, the RSI has to come down to the 40 and reload, so to say. It never comes down. The first time it breaks it down, so now I have to take my cursor, it breaks down, is here, and it never breaks up again. You see the indicator? It never breaks up, and that's the signal if it breaks above the 40 again. And here is our cross, and we're officially now not in an uptrend anymore. And from here, we're in a downtrend, because it's really drastically starting to angle down. And here we would have had the second trade. It touches the 60 and gives the signal after that bar. And yeah, would have been good for 2 to 1 for sure. But yeah, that's very late. Just to say, today indicator, I mean every day so far, but this setup would have worked every day so far. Okay, good. So I might attach Al's version of the day. I can show you quickly what he marked. So see, there is no short trades in this whole triangle, in this whole trading range or triangle open, only long trades. And I'm pretty sure it's because they're all into the EMA, even the ones that are close to the upper third. Okay, so have a nice day and good trading. Bye-bye.